Okay, recording this video Sunday 15th of June 2014. Hope you're having a good weekend. Well, I want to talk about crude oil in today's video because we had a really nice confirmed breakout with Thursday's activity on crude. We're breaking nicely above resistance on the daily and the weekly chart. But before doing that, just want to talk about a couple of housekeeping things. First of all, the E-mini this week was incredibly dull and painful trading. Low range, low volatility, kind of low volume type stuff. With the exception of maybe I think Thursday was pretty decent, and then we had rollover as well during this week. So it was basically a mess, and I hardly traded at all. The only thing I can say is, volatility, range and volume, all of those things, they're cyclical. They go through patterns of being quiet and then active and then quiet again. We're just going through one of those quiet periods as we're reaching new highs, and we've got Rambo patterns and kind of amateur up bars type stuff happening at the moment. I promise you the volatility and the range and the volume will come back in at some point. It's just we have to be patient and wait for it. And if there aren't the opportunities, just kind of back off because the low range days are the days that kind of kill you. Second thing to say is I finally bit the bullet and decided to get a professional email distribution service. I was just using a free service that Google kind of put around called FeedBurner. This new service costs a little bit of money. The good thing is the emails should be distributed almost instantaneously. An update or a video goes out on the website, you should get an email. One of the biggest complaints I've got over the years is that if I missed my distribution cutoff for the emails, the email was delayed for 24 hours, and so particularly with some of the time zones I'm recording videos from, it's quite difficult to get those out in a decent amount of time, and so people were getting some of these video updates effectively a day late, and they were saying to me, what the hell, that's no good to me anyway. So hopefully that will be improved. I have to say for the time being the emails will be incredibly ugly, and you just got a burst of 3 of them at the beginning of this week through a little bit of a technical glitch on that distribution side. I will make the emails kind of prettier, got something in place to put that in place. So you should see Emini-Watch over the last several weeks has made a couple of kind of changes. First of all, the video distribution service I'm using now is a lot better. You should be getting a lot clearer videos, faster loading videos. You should be able to get those videos on all your devices, mobile phones, iPads, you kind of name it. Now we've got a proper email distribution service, and the next thing that's going to be coming is I'm going to be moving the site theme to a responsive theme. So it's going to look ugly as the thing's kind of worked out, but then it should look very pretty after that. So just need the time to put those things in place. Let's talk about crude. Crude is funny. I've not done an update on the crude since talking about my long trade back on the 8th or 9th of April. And it's because I got a little bit of just pushback. I'm not going to call it anything more than that. Just a couple of emails from a couple of people, and they were just telling me I was wrong on crude. And I don't know, I just didn't feel like responding to those, and I don't particularly feel right responding to them now, but it's just nice that the trade's kind of working out. I appreciate all the communication I get from subscribers from Emini-Watch. I really do. I respond to a fraction of it just because it's just too much of it, and life is not about just replying to emails. And I do appreciate your feedback, but you have to make your own decisions. And a lot of the emails that there were 2 emails that I got from 2 different people on the crude trade. They were pointed at the fundamental reasons why crude ought to be going down, and I understand all of those kind of fundamental reasons, but at the end of the day I'm not a fundamental trader, I'm a technical trader, and I was going based on signals. For me, what's interesting about crude, and I probably sounded like a broken record on this, is the commitment of traders charts. This is the usual kind of setup on a weekly chart. On the weekends, when I look at my kind of global macro charts, we get the new commitment of traders numbers kind of come out, and I can look at the commitment of traders on the weekly and the monthly chart kind of side by side. I flip the numbers upside down because that's the way they make more sense to me. So for example, then you can look at price versus the commitment of traders and look at bullish and bearish divergence signals, and you can see here the commitment of traders was kind of coming back to 0, and as price was reaching new lows, generated bullish divergence signals. Here, as we made new highs, coming back to the 0 line, bearish divergence signals and so on. Bullish, bearish, bearish, bullish, bearish, bullish. That for me makes sense. That's why I flipped the commitment of traders numbers kind of upside down. But for me, this is what's interesting about commitment of traders and crude. We've got the commitment of traders stubbornly above the 0 line here for years, since 2010. And this is very unusual. This is not the normal picture. The normal picture is to move backwards and forwards as the professionals and the commercials kind of move one way or the other as different things kind of happening in the market. For them to stick above the zero line like this for a prolonged period of time is incredibly unusual. The only other time I've seen it is on gold, and this is where I referenced the gold chart on the monthly chart back in 2001 to 2002. The same thing started to happen. We went going through this consolidation period in gold back down here at the lows. For a long period of time we had this kind of situation prolonging, and then it led to this massive run up in the gold price. And I missed this, and in fact this is part of the worst trade of my life, which I've never kind of publicly talked about on video about what I did wrong here. One day I will. It's still painful to me, but I kind of regret not having a long-term picture kind of view of this. This was a 10-year trade, which was hugely profitable for those people who are on the right side of it. And I wonder if crude is setting up for a similar type thing. Yeah, we had this huge bust up to $200 in '08 when the financial crisis and the equities markets were starting to fall apart. We had this massive move in crude, and then crude kind of collapsed back down again. I wonder if we're setting up for something kind of super big in terms of move like that. Who knows? I have no idea, but that's the only corollary I can talk about where we had a similar experience that led to this. As a reason why it might do that, the only thing I can put forward is that this last week we had Japanese government bonds, JGBs, didn't trade for an entire morning. There was zero volume. I put around a zero hedge article on to the Google Plus subscribers on that, just saying, look at this is kind of interesting. The Japanese bond market has become a fantasy. It doesn't exist anymore because there's been so much government intervention in the bond market over a decade that it doesn't mean anything. It doesn't pay anything. Hardly traded. They're kind of just sat on by the pensions and the postal service in the in Japan, who have the largest kind of pension fund there. They're not even trading now. So I mean, that market has just totally kind of disappeared. It doesn't mean anything. It's a fantasy. And then we've got the currency markets where we have so much manipulation by the central banks in order to try and get some kind of export advantage, which is just nuts to me. The easiest lever to pull to get economic growth is lower taxes, massively lower taxes, and you'll get economic growth. You don't need to be mucking around with a 10% move in your currency. You think that's going to drive your economy from a 0% growth rate to a 4.5% growth rate? Forget it. It's like a currency move is short-lived, and anyway, so we have this massive currency intervention by the central banks. And so what does a currency mean anymore? It's like no one's looking at the fundamentals of one economy versus the other. They're looking at the relative growth rates of the balance sheets of the central banks. And then we look at the equities market. The equities market, again, it's like we're making record highs, and we've got negative GDP prints. At best it's 0.1, and it might be as bad as, I think some of the numbers, 0.9 for the quarter or whatever. We have an equity market. Yeah, there have been some buybacks and so on, but it has no reference back to the economy and kind of fundamental growth. So, currencies, bonds, equities, what do they all mean anymore? They're all just kind of manipulated markets. Well, what we're left with is kind of hard assets, and crude oil is one of those huge kind of hard strategic assets, property. And to some extent, the property horse has bolted. We've got record prices in all the major capital cities around the world that are bizarre, in terms of relative value to income and so on. So, but with fundamentals, something like a strategic asset like crude, maybe there is a position. It's like if everything kind of falls apart, well, we're still going to need crude. We're still going to need that as while we're waiting for electric cars to come mainstream and so on. So that's the only reasoning that I can think that this might be a big long-term play. As I said, I've never been able to do a kind of a multi-year play in anything, and equities in even swing trading. The longest swing trade I've held was for a few months rather than a year. I've held one equity for multi-years, but that's just kind of a little bit of randomness in portfolio holdings. I wonder, I'm itching for one of these kind of really big long-term trades to kind of work out, and that's why I've taken a couple of bites at this crude trade. So weekly and daily charts are useful on commitment traders to look at your weekends to see kind of what the professionals are doing, and the professionals are kind of supporting a breakout in crude because they're above the zero line and consistently above the zero line. And I'm just wondering, is this going to be something that really surprises to the upside? On the daily and the weekly chart, again, this is the weekend setup that I'm using. Same indicators, better pro-am, better sine wave, better momentum. Looking at daily and the weekly charts of the continuous contract of crude. Now, the last bite that I had into this, so there was an alert that went out last year where we had a break from 98 that ran to 108, and it was a nice little move. I didn't get on top of this. I had some great emails though from subscribers to Emini-Watch that did make good money on that long trade, so good for you. The setup for that trade was, looking for all these blue professional bars at these dips. When we had this huge kind of drop off, but ever since we've had blue professional bars kind of coming at the lows, at the lows here, at the lows here, at the lows. This was a really nice U-turn pattern here. So they were buying that dip and then anxious to get on board, and then this particular up bar here, they're anxiously buying it. We come back in to test, but the lows of the blue professional bars hold. So whenever we're looking at these kind of breakout bars, when we come back in to test that blue professional bar and it holds, the low holds, and we break back up above the highs, you know that the professionals were active on that bar and they were buying, because we've reversed and we've gone the other way into this kind of dip. It went further than the blue professional bars, so this is where I got myself wrong-footed. It was a good call, 98 to 108 up here. Then I tried to re-enter on this test back into support. I was resistance. I was hoping for resistance to turn into support, this to turn into a trend break where we get pullback to end of trend kind of going on, and no, it sank really quickly, and I was too slow on my feet to get out of that trade. I got out having gone through quite a lot of pain here when we tested back up to the entry, and I took a small loss on that at this kind of amateur up bar here. But subsequently what we've done on this weekly chart is tested down. We had a Rambo pattern at the lows, we had amateur down bars into here, into this zone. Remember where the last time we saw the professionals kind of really active around here, they were buying this test, and they kind of caught it here. We didn't go past the low of that blue, or just marginally. We held it, kind of above the low of that blue professional bar. Then this last little sequence here, again, blue professional down bar here. Then we break to the upside, and this is where I was getting long break just above 100, about 102. I was doing it on the ETF. I was not using the futures contract. Last time I was into this trade, I kind of put out some feelers and got some very good feedback on the relative merits of trading the futures contract, a leveraged ETF, a straight ETF. And I decided to just go with a low risk play with the ETF, just because I'm looking for this for a long-term kind of move. So on this break of this blue professional bar, breaking above resistance, that was the signal that this was kind of interesting, likely to kind of go above resistance and break into a trend move. Well, we've settled back in, but again, the lows of these blue professional bars have held. We tested back down, and then now we're getting the break. A little bit of a Rambo pattern, so we've had some weakness from the Rambo pattern. If the Rambo pattern were happening after a blow-off move, so if this were Rambo pattern here at these highs after blue professional bars and a blow-off move at these highs, then I'd be looking for serious weakness after that. But when you have a breakout there with a Rambo pattern, all that means is we're just going to get a little bit of weakness that needs to kind of work that out. And then with this week, with the kind of fundamental news coming out of Iraq that things are not kind of going well there, we had this kind of nice break. So what that means now is that on the weekly and the daily chart we have a nice kind of confirmed break. On the daily chart it was jumping the creek effectively, blue professional bar through resistance. It would have been nice if it were kind of a bit below that resistance line, but anyway, it's taken off from that resistance line, so that's jumping the creek, getting this thing going. Now the one thing I would say is that better momentum did not signal an exhaustion pattern down here, and again I've referenced this in previous videos. It was a huge reading though. It was very close to this kind of exhaustion reading on the upside, but it wasn't quite enough to get better momentum to kind of signal. But in the back of my head I've always thought that that is an exhaustion pattern down there, although we didn't get a signal like we did for this kind of roll-off move. And then ever since then at those lows, back in the 80s, we've been testing and testing. Bullish divergence patterns kind of come in, very shallow selling at the moment, and then now we're kind of taking off. So it's kind of third time in, second trade for me on long crude. Hopefully this one's going to be the one that's going to really travel some way. Obviously the previous high that we've had up here, up at 110, is going to be kind of critical going forward. We need this to kind of continue on, breaking up to new highs. After a blue professional bar like this, and on the daily chart, you can see we've got a little bit of a long-legged doji type pattern here, so it's a little bit of uncertainty. It was taking off based on on some news events rather than anything more kind of generic than that. So there's a lot of emotion in that trade, so we could easily settle back into that and just see where it goes. But as long as the low of that blue professional bar kind of stays intact and we kind of continue to break up to new highs, we're on a trend move on these daily and weekly charts, and that's what we're looking for the big trending moves, is breaks on the intermediate time frame into a pullback to end of trend. That has the potential to go places. We've had one break here and we tested. This is a second break here, so again, coming in, hopefully this one kind of really starts to travel. So that's what I'm looking for on these kind of time frames. The interesting thing is that crude has got this kind of long-term picture, and so this potentially has it's just some serious kind of interesting long-term implication. I hope your trading is going well, and let's hope that next week we get a little bit more of a volatility range and volume kind of traded on the mini, because as I said last week was pretty dull.